Hello traders, my name is Anna and I am full-time Forex trader. In today's video, I would like to talk about risk. As traders, we can have the best strategy, but if you do not have correct risk approach, I really don't think you can be a successful trader unless your strategy is 100%. Is there a thing as 100% strategy? I mean like 100% win rate. I don't think so. Anyhow, I would really like to talk about the accounts when it comes to trading with the certain rules. For example, like we have 10% drawdown rule, daily drawdown rule, and I would just like to share the way I have approached my trading when I was within those rules. Obviously, it is different when we are trading our personal funds because we are the ones that make the rules. And I always laugh and I say, I'm the boss. When I trade my personal account, I'm the boss, so I make the rules. But if you are a trader and you are looking for a funding through prop firms, then you do have a daily drawdown and you have a maximum drawdown. To make sure that your strategy is good, you also need to make sure that your strategy is gonna work within that risk. So I would like to give you, I call it risk portfolio. I would like to introduce or just really explain how I have used this risk portfolio to pass my challenges. Before I show you anything, I just want to talk about risk appetite. It's actually really important to understand what kind of trader you are and how much you can actually stomach, right? How much you can take on. For example, I know traders who are trading very low risk simply because they cannot understand putting more than 0.10% per setup, let's say. So that is considered low risk. There are traders who go more aggressive and they will be trading 1% per setup or even more. However, it is really important before you really decide about your, who you are as a trader. You feel like, hey, I'm this aggressive trader. I want to trade aggressively because I want to risk more and gain more, right? But the thing is, your strategy is saying that you can go through long drawdown periods. So that means you cannot really be an aggressive trader because if you will risk 1% and you know that your drawdown, you can go through the drawdown, which is 15 trades in a row, you will lose. That will just mean that you will blow your account. So obviously it's different when you trade your personal account because remember, you're the boss. You make the rules. But if you do need to trade within the rules, then you really need to make sure that you first, before you really create that risk portfolio, that you look at your strategy. The most important thing is you really need to look at that streak, your winning streak and your losing streak. And winning streak, not so much, but your losing streak. That is the most important and crucial thing for you to look at before you can really decide what kind of trader, what kind of approach you should use. I just want to start and explain the way I have kind of tweaked this risk portfolio, how I use it, and I'm going to actually walk you through the charts and give you an explanation when it comes within the trading setups. So keep on watching. Right, now let's look at different examples how I can approach my risk when it comes to trading within a daily drawdown rules and overall drawdown rules. So just want to say, if you have your personal account, then you can risk 1% per position. If you feel like this is something comfortable for you, then you can do so, risk 1%, and you can go even in 10% drawdown and 15% drawdown. And if it's still comfortable, if you still feel comfortable, then definitely you can do that. However, for the prop firms or the companies where you're trying to get the funding, it is different. We need to obey the rules. And what I have done is I created for myself a risk portfolio. I don't think it's a right name for it. It's more a scale in into your risk and descale out of your risk. The idea is this: we start with lower risk, and as we grow our equity, we increase the risk. Or obviously other way around, because as we know in trading, not everything is just going straight to the top, right? We can also have a drawdown periods. We can have some crazy drawdown periods, for example, for 6 months, sharing from my terrible experience. So if I am trading and if I'm hitting loss after a loss, I will decrease my risk just so I can keep within the drawdown limit. The idea is this: we start with 0.25% risk. I'm saying it's me. I start with 0.25 risk, and let's bring it on the chart. Let's say we are entering this setup here, which is GJ setup, and we are losing our first trade. And if we risk 0.25%, that means X, we have lost the trade and we move to the next setup. We take another trade and what happens is we lose this trade again. So now this is where my risk portfolio kicks in. I'm gonna still keep on calling it risk portfolio. So this is where it kicks in. I risked 0.25 and here as well 0.25. Now I'm at 0.5% loss. It is totally up to you if you want to start with 0.5% risk, let's say, and then you can decrease it. I feel comfortable starting with 0.25 simply because now there's no more like a time limit, so you can take your time, take your sweet time, you know, don't rush things, and I think 0.25 is fine. So what happens is when I lose 2 trades in a row, I will decrease my risk. And this is the most uncomfortable, probably most uncomfortable thing for the traders to do, because you will think, hey, you know, but if the next trade is a winner, then I kind of feel bad for decreasing my risk, because if I would stay on the same risk, then I could have covered for those losing trades most likely, and maybe even made a little profit. So this is like that psychology part where you need to just basically accept the fact that once you hit 2 losses, you will have to decrease the risk just to keep you on the safe side, so you're not really playing with fire, I would say, you know, so you're not close to your drawdown limit. So for me, it's this. Let's say we start with 0.25%, we lose 1 trade, we lose another, and now we're in 0.5% loss. I know 0.5% is not a lot. If you start with higher risk, obviously, then you would be in a bigger loss. And then the next trade, thankfully for myself, was a positive trade. Again, keep in mind, you need to look at your losing streak. If you know that your strategy goes through 10 losses in a row, you cannot risk with 1%. I would say you cannot even risk with 0.5%, just to be on the safe side. So anyhow, the rule is this: you lose 2 trades, you decrease your risk, and now you trade not with 0.25, but you halve that. Or like, to keep the math easier, you can do 0.15. So you can risk with 0.15. And for example, this trade was 3R, it was a winner. And if I risk 0.15%, then I have made 0.45. So I have almost covered my losses within this 1 trade, although I took it with lower risk. And now let's talk about like positive things. What happens when you take the lower risk and if you win? I know the first thing will be like, oh, I wish I just put the full risk on, then I would make more money. But the thing is, think about it. You have lost trades and 2 in the row. You're probably a little bit like worried because you have like been through the losses now. If you use lower risk, mentally, I think it's going to be easier for you to pull that trigger to actually enter the trade. I'm speaking from my experience. It's always easier for me. If I have been through the losses, it's so much easier to enter on lower risk. And I think that's where this approach is really good. When you start to go through losses, you decrease your risk. If you move on, and let's say these are just going to be imaginary trades. Let's say we took a setup in here, the setup was positive, you won the trade, and then let's say you won another trade in here, like somewhere in here, you won the trade. Okay, and now at this point you are up in your balance, which means now you're in positive. Let's say now you're up 2%. So what would I do? After I have 2% in my equity, what I do is I increase my risk. So I go from 0.25 to 0.5% per position. And that just keeps on moving on. When I have 4% in my balance, when I have made 4%, I can move to 1% risk. Now keep in mind, this is obviously really, I would say, more aggressive if you keep on, you know, increasing the risk, because what happens is you made 4%. If you risk with 1%, 4 trades, and you will be gone. You will start again from the beginning. Have I done that? Yes, I have. I have been through so many like ups and downs. And if you're a trader who likes to see that nice, cute equity curve, which is just going up and up and up, this probably risk approach is not going to be for you, because see, once you increase the risk and you go through losses, you will see some crazy dips in your equity curve. But at the same time, I know that this approach is working. And for myself, it's really, I think the best thing about this approach is that once you go into the drawdown, you decrease the risk and it's like mentally easier. Okay, but obviously also it's once you start to make money, once you start to build your equity and you start to risk more and you, let's say, hit your like winning streak, then it's so much easier to reach those targets as well, as we know. I am a really strong believer that the risk is something that makes us or breaks us as a trader. And you know, you can talk about like different things that, you know, will make you or break you as a trader. But I think obviously the strategy should be like number one when it comes like all the data and all the technicals. But we have like also two sides of trading, right? So we have like mental side, you as a human, you as a personality, like who you are as a person and how it's going to affect your performance. And obviously all the technical stuff, like which is like statistics, which is data, backtesting and all that kind of stuff. But I think this simple risk approach has really helped me to, I would say like just to see that when things are going smoothly, everything is like great, especially with this risk approach. When you start to increase your risk, once the balance is building up, obviously things will go really, really smooth. But the same thing is that when you hit that really like that bad place in your trading, when you take loss after a loss and see decreasing the risk, can really, really help. And hopefully this is maybe an approach that you will try, or you are just more of like, I don't know, traditional trader who will just use the same risk as per all the positions, which is absolutely fine. I just think this kind of approach is really like easy on our mental state as a traders, especially when we hit the drawdown. It has definitely helped me, and I have really shared that like since last year, 2023 June, I have been on some crazy roller coaster drawdown. I would go up and down, up and down. It was like a ping pong. My equity curve is the ugliest equity curve you probably can see. The thing is, because I did have this approach in my mind where I'm decreasing the risk when the things are going bad and increasing the risk when things are going good, and still accepting the fact that I'm still like accepting the risk that I'm risking now more, and if things are starting to go bad, I will be down again. So that's also like acceptance. But anyhow, guys, I hope you enjoyed this video. There's going to be next one about backtesting because so many of you have actually requested that one. And also don't forget to tune into my live streams. If you want to know when they're happening, just follow me on Instagram. I will be posting in like the time when it's going to happen in my Instagram story. So anyhow, thank you so much for watching. I really appreciate you all support. Remember to like this video, to subscribe. What else do we need to do? Oh, bring the bell notification. Put that bell notification on, and I will see you on the live stream. But the next video will be posted on Saturday as usual. I've been doing 3 videos in a row now, so I'm very proud of myself. So anyhow, thank you for watching. As usual, use proper risk management, and I will see you in the next video. Take care. Bye.